But like the markets are telling you, show me the global economic collapse. Otherwise, I'm just going to keep grinding higher. Basically, like cash is trash. S&P is like the real denominator of like American savings now. And Bitcoin is like the risk asset that you could take a bath on, but probably won't.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Anyway, guys, welcome back to another 1000X podcast. It's been a fun week. A lot of new headlines, but the market's been pretty stable so far, Jonah. What say you? What have you been looking at?
I mean, it's not the kind of market where we have a whole bunch of new news factors to talk about or price action to talk about, but you know, Bitcoin's hovering near the highs. And I keep thinking to myself, a wise man named Avi Feldman once told me, BTC never stabilizes on the highs, right? It never just ranges on all-time highs. It usually busts through them and goes way higher, or it nukes and goes way lower. And the logic behind it and the technicals behind it are debatable, but you know, whether or not the logic is recursive is kind of irrelevant because it's true. So basically, are we just going to sit here and trade sideways, or are we going to rip, or are we going to puke? It feels like we're definitely not going to trade sideways for much longer. I don't think we're going to puke. So I'm strapped in for a rally. I think there is some dismay that I like. One item that I do want to discuss is it feels like there's a lot of dismay in the, you know, air quotes, crypto trading community about how there's really nothing to do in crypto anymore other than be long Bitcoin, hyperliquid, and maybe some like low FDV tokens that are in the RWA space, because that's where there's some potential. But it feels like most of crypto's dead and it's not coming back. So other than maybe being the short leg for your Bitcoin trade, like what else is there really to do? Also, like the best short leg in the world is the dollar. Holy crap. After this big, beautiful bill got passed, it feels like the dollar's on a one-way train to zero. So long BTC USD, is there anything else to discuss in our space? It feels like that's really the question.
What's kind of interesting here is that my answer is no for right now. I will say, just talking about Bitcoin for a second, I want to talk about trading this thing from the lows of about 100K. That happened end of June 22nd is when we had that little wick, and we had a pretty big liquidation where we got rid of about 20,000 coins in open interest on futures. We've added basically all of that back. And so there is still a reasonable amount of leverage in the system. And one thing that concerns me is that we're ranging on the highs despite all of these treasury companies attempting to buy Bitcoin hand over fist. The question is if that can't break us higher. I mean, there's clearly a ton of supply around these levels, and maybe we need a little bit more time to range. I mean, if I'm looking at a similar fractal to last time, it's very, very, very rare that BTC ranges on the highs for an extended period of time and then actually breaks up. Normally what you see some sort of downwards movement in BTC. And I'll show you what I mean on the chart over here. Okay, so Jonah, you see this chart?
Yeah.
Generally, when Bitcoin does this thing, where we're looking at a weekly chart here, you can see it even a little bit better on the daily. When we start to range sideways at the highs, you can see it happen from November 20th to February 24th. Normally, you get some sort of breakdown before you continue to wash out the leverage in the system. It's kind of the same thing happened in 24. You see this long period of range, and then you sort of break down. That's because generally, when you get a range at the highs, you lose what drives Bitcoin up. And what drives Bitcoin up, as I've said on the podcast before, two things: it's value and momentum. And so people don't find 108,000, like above 100,000 is probably not value for Bitcoin. But at least there was a solid amount of momentum for some time, but Bitcoin's lost that momentum. And when Bitcoin loses momentum, it tends to retrace a little bit. Maybe that's a dip back down to 95, which wouldn't be so bad, which I think would be amazing. Like if I could buy 95, I'd be buying 95 hand over fist. Maybe it's, maybe it's like this 90 to 96 area. And I think you need a little bit of patience here to really, basically, I don't think you should be buying a tremendous amount here if you're not already allocated to Bitcoin. In fact, if you're allocated to Bitcoin, maybe start chopping some off. And this also has to do with some of my equity views, but just looking at the Bitcoin chart, you tend not to go sideways for a long time without a sell-off.
But do you want to sell Bitcoin
rare.
Or do you want to sell some other crappier crypto asset like WIF or Cardano?
You definitely want to short the other crappy assets. That being said, sometimes you can't do that in size.
Like I wouldn't want to realize
right? What I
BTC.
would want to do here is sell BTC, is buy BTC, short Cardano. Like this type of setup is a very good setup for a long BTC short alt, because BTC tends to sell off a lot less than altcoins sell off in this market environment. Now, again, with all that said, if you are just, for example, a Robinhood trader, a stock trader, and you trade Bitcoin and Ethereum only, go ahead, maybe cut some out of your BTC and ETH here, because it's just rare that Bitcoin goes up without sustained momentum. And right now we don't really have anything on the horizon. So what you need is Bitcoin to form a base. It basically needs to range longer, form a base, and create a psychological floor level in people before it can start to rip. Or some good news needs to come out, right? Some new large buyer needs to come into the market and announce that they're coming into the market. Otherwise, I'm a little bit skeptical on Bitcoin's strength at these levels. And that has to do a little bit with my equity view, because I'm starting to get a bit nervous on equities heading into this August deadline for the new quote unquote Liberation Day tariffs. I think that the market has done extremely well. It has rallied basically in the face of it all. Trump has delivered on everything that he wanted to deliver on from an economic point of view, but he's done so because Wall Street views him as a chicken. And they don't actually believe that so the tariffs worked with some people as a negotiation tactic, but the larger tariffs that he's pushed off and said, if you don't come to the table, then we're going to slap these on you. I don't think the market actually believes that that's going to happen in any meaningful way right now. But as we get closer to the date, there's an interesting thing in trading, right? When you think about risk parameters, you think about, how far could it go down, but also how long do I have to hold the trade for? As we get closer to the date of August 1st, it actually makes more rational sense to take that view that, maybe these voice that view, maybe these things will stick, because then you have to hold the trade for less time. So I think people start selling as we get closer to the date. It's my personal view.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Katana isn't another new general purpose blockchain. It's purpose-built for DeFi users to provide the best experience possible. It does this by sustainably generating deeper liquidity and higher yield than any other network. If your assets are sitting idle, then they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners like Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of KAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for the lucky ones. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah, I think you're right. I don't know. I guess before we get into this tariff stuff, I want to ask you a quick question on Bitcoin. We talk about long-term holders, sell, these vehicles that are buying. What are the OGs that you know from your network doing in Bitcoin right now? Like, I don't know that many OGs, but the ones who I talk to are still holding on, right? I've talked to other guys who know other OGs, and these are like the big whales who own hundreds of millions or maybe over $1 billion worth of BTC that they accumulated way back when, for a few tens of thousands of dollars. Those people, like, just basically people that I'm connected to either directly or one step removed from, aren't selling. I'm curious if you've just anecdotally heard anything about that community selling here.
Yeah, I think that I don't know about I mean, if you've held Bitcoin from 2011 to if you got into Bitcoin 2011, 2013, and you haven't sold a cent of Bitcoin since then, you're freaking fanatic, and you're probably not selling
Yeah.
ever, no matter what. But I know a lot of people from the 2015 to 2017 class that got into crypto, uh, taking a non-trivial amount out of Bitcoin and just sticking it away in cash or buying equities with it. I personally made a move where I divested a reasonable amount from crypto because I was so heavily invested in crypto for a very long time. And okay, you start buying equities, you start diversifying out. The idea of diversification is spreading rapidly right now through the circles that I came in with, which again are not the OGs, not the 2011, 2013, but the 2015 to 2017 crowd. I think there's a desire to reduce the volatility of the portfolio and an understanding that Bitcoin now no longer has an insane risk reward relative to other assets that you can buy. It has a better risk reward than 99.9% of assets listed that you can trade, but it's not like 100 to 1 anymore. In the same way that, so for example, there have been plenty of stocks that outperform Bitcoin from the FTX lows.
Yeah.
And I think that sort of got in people's heads, like if Robinhood can go from $7 to $100 and Bitcoin goes from 15K to 100K, Robinhood's outperformed in that scenario, and it was a stock, right? And obviously,
Yeah.
yes, there's crypto exposure there, but at the end of the day, it's a real company with a real business making real money. And so I think a lot of people, at least, yeah, my people are saying, okay, I'm willing to sell down, and I think that's a little bit
So
of what's happening right now.
are you willing to share any like kind of broad details about the amount of diversification that you did? Like you don't obviously need to go down into
No,
like
I'm happy to share.
dollar
I mean,
detail, but like
I
percentage
went
detail.
from I went from 90. I mean, from in at post FTX, I went from 95% in crypto. Like I'm saying, I actually took my net worth up to like 95% exposure to crypto, FTX, and then 2023 was probably at 70. 2024 was probably at 50. Now I'm at 30.
Yeah. I'm similar. I mean, basically where I see this asset class going is I can't think of anything better to invest in than Bitcoin by a long shot, like you said. But putting 100% of my money into crypto feels like insanity to me. It just feels like the wrong risk profile since I'm trying to preserve some wealth now.
And it's not even about the preserving wealth. I think that's a huge part of it. But for me, it's about where, like, what do I want to invest in to actually make money, right? So I pulled money out not just to stick it in equities, but I pulled money out to go invest in specific equities, like RKLB. Like I want to own that. I want to own that thing. I want to own I want to own this robotics company that I did a private round in. So I want to pull out some money to go put some in there. Like I want to I want to own more specific assets now. Like I want to put my money in Palantir. Well, not now. I think Palantir is a little bit overvalued now, but
Yeah, I've been doing a
I'm
lot of
saying
private
it.
investing. I've been
I'm
doing a lot of
saying,
like. Sorry, go ahead.
yeah. I guess what specifically what I'm saying is that, um, just I view other good opportunities out there in this world.
So, okay, so now we got to talk about the tariffs. So I think it's very interesting that we sort of like close the book on where Bitcoin's at right now. I do think we get a pullback, a small pullback. Maybe it only goes to 102K, maybe it goes to 97, maybe the pullback's to 105, but like we get a small pullback. Alts will drastically underperform on that pullback, and then I think it just keeps fucking chugging again. Now, I don't think the OG community is going to sell so much that it keeps a lid on Bitcoin. I think most people agree, even long-term holders, that this is still the best risk reward of any asset class out there. Like you said it best. Maybe it's not the most contrarian bet of all time like it used to be, but it's certainly still way better than SPY.
100%.
But in terms of like, you mentioned some interesting macro stuff about like Trump chickening out, Liberation Day Part 2 starting in August. I don't think it's possible. Like, I'm going to give Donald Trump a little bit of credit here. I don't think it's possible to chicken out from a stance that you never really had to begin with, right? Like, there's posturing and then there's actual policy. And I think that when people say Trump always chickens out, I think what they realize what's kind of the reason why that's kind of a red herring is because he never actually commits to any of these extreme policies. It's usually just posturing to anchor a negotiation. So that's entirely rational. And that's what people do in all sorts of business negotiations. Like anybody who's ever haggled to try and increase their signing bonus or their salary for getting a job, like, like basically trying to get hired into a new job. And it, like, anybody who's ever read Kahneman and Tversky, Thinking Fast and Slow, these Nobel Prize winning economists who write books about this stuff, like anchoring, it's a thing. You anchor a negotiation way in your favor before it begins. And then what seemed, maybe a little bit out of the question, suddenly like the Overton window covers it and you can negotiate towards an outcome that's better for you because you've anchored it to begin with. Like this is just like Queens, New York style real estate haggling played out on the global stage. So no, I don't really think he's chickening out. No, I don't think he ever intended to, install a tariff policy portfolio that dooms the stock market or the national economy. I think he's just saying ridiculous stuff to freak people out. So I don't think it's him chickening out. I think it's all the economists and pundits and people like Larry Summers chickening out when the anchoring piece of the negotiation gets discussed. And then suddenly they just disappear into the ether when the outcome is stocks on all-time highs and tariffs sort of like, they are what they are. They're not really hurting America, at least not yet. So where I think this is all going to land is somewhere rational. And I think the market is finally sniffing that out. I called it early. I called it in April on the lows. You called it early. And now the market is just doing what big macro markets do after a couple of these. It's like, basically, to make an analogy, this is like how dollar yen used to react like crazy back in 2010, 2011, when Kim Jong-un would fire a nuclear test off or some intercontinental ballistic missile. Like the yen would tank, the dollar would rip, dollar yen would explode on every single one of these like rocket tests. And then after a couple of them, the markets just stopped moving. It was like, all right, show me the nuclear war. I'm not going to move. And now we're basically, this is just what markets do. Oil did it with Israel, Iran, and now equities are doing it with Liberation Day 2.0. We're just in like But like the markets are telling you, show me the global economic collapse. Otherwise, I'm just going to keep grinding higher. So I think like S&P is the new dollar and Bitcoin is the new S&P, basically. Like cash is trash. S&P is the real denominator of the S&P is like the real denominator of like American savings now. And Bitcoin is like the risk asset that you could take a bath on, but probably won't.
And it's funny. It's like I feel like Trump has said this without necessarily directly saying it. I mean, for example, the $1,000 in S&P for every person born in the United States. I mean, you know, if this were 30 years ago, what would have been said is we're going to put $1,000 in a CD in a bank account for you at
Yeah.
you know your interest rate, the government interest rate for the whole time. And Trump's like, no, S&P. And I think that actually had a little bit more significance than people gave it credit for, which is that he understands that wealth should be denominated in, you know, the output of the country, which is contained from the makeup of the companies in this country for the most part, other than government spending, which is also increasing. But it's really interesting because also he has said, like, I'm tanking the dollar. He wants to make U.S. exporting more valuable, you know, or sort of more competitive. So what's going to happen is that that dollar is going to keep coming down, and that's going to be very good for Bitcoin in the long run. It's just with Trump, he's the headline president, right? He's the, okay, you don't know what's going to happen next. He's going to probably shake it up a little bit. You have to pay attention. There's going to be some good trades in here. So, you know, as a trader, one thing that I just recently did to protect my portfolio and, you know, try to basically give me some wiggle room if something does break is you buy some puts, because you can always sit there and you can say, all right, well, here are all the reasons why I'm not going to freak out about Liberation Day. Here are all the reasons why it's going to resolve itself. The same reasoning as last time, but last time something broke and that provided a ton of opportunity. And you do need to sort of look forward to these types of events and say, okay, well, even if I'm wrong and it doesn't play out, shouldn't I give myself the optionality to play some sort of breakage? Like, why put myself in the position where I can't play the game, right? For the last, basically since last April, what have we been sitting here and saying? Look, these headlines are nonsense. This Iran war is nonsense. Everything's going to be fine. Markets are going to keep going up. Just stay invested. That's been the consistent take of ours since Liberation Day. I'm saying now, because of this, I'm for the first time telling you guys, hold on. I don't, you know, maybe you can actually try to capture some sort of event here. That will give you something big. I mean, obviously the market's gyrated a little bit with Israel, Iran, but we were both. I mean, you were saying watch oil, and I was saying Iran can't fight Israel.
Yeah, I mean, no, it's totally true. I think basically where I'm at with all of this is like, what's the real catalyst for Bitcoin? I kind of see like we can talk about stocks in a second, but like what's the real catalyst that's going to send Bitcoin higher? I can kind of see two of them. Catalyst number one is sort of a steady, ongoing source of flow, and catalyst number two is more of a point in time thing. So let's start with the point in time thing. I forget his name. I'm embarrassed. The guy who's based, there's like a young guy in the White House, not David Sachs, but like the other kind of like crypto guy in the executive branch, who's responsible for talking about the strategic Bitcoin reserve. He just keeps going on every media channel and speaking at every conference he can, saying like, there's big news coming out like late summer, early fall. Like we're going to be adding to the strategic Bitcoin reserve. Like prepare yourselves for it. We're going to be freeing up capital somewhere to buy BTC. So, you know, I'll send a few tweets out later. Maybe we can put them in the show notes. But like, there's that guy. I don't know how much credence to place in it, but if the SBR does start accumulating, like, look out. Bitcoin's just going to go parabolic. The other thing is, like, we are Yeah, and I'm not even talking about like rate cuts. We're just in a situation where everybody who's had anything to do with crypto or ever tried investing in crypto has finally woken up to what the no coiners were saying way back in the day, which is that there's absolutely no realistic reason to have a token unless you're, I guess you could buy it back, and that's kind of like shadow equity. So why not just issue equity? Maybe it's clunky or whatever. But like unless you're like creating an equity like instrument with your token, kind of like Hyperliquid does, there's no reason to have a token, right? There's no reason to launch a token. It's all, I don't want to call it all a scam, but like governance tokens that are just like meme coins, tokens that are have the same name as maybe an interesting business but no financial relationship to it. Like these tokens don't need to exist. And the holdership of those tokens is in the tens or hundreds of billions of dollars. And people finally are figuring this out. You know, it's called revenue meta to some. Others are just like giving up on altcoins and the idea of an alt season. As that happens, like I don't think that money leaves crypto. Like I don't think people are going to sell their shitty altcoins and give up on everything altogether and have no exposure. Like if you're far enough out the risk curve that you're holding like Celestia or Polkadot or Cardano or whatever, I think eventually you're going to rotate it into Bitcoin. And so I really do think that there's going to be steady inflows into Bitcoin coming from other altcoins, and BTC dominance will continue to grind higher, as useless a metric as that has become.
Yeah, I have been, you know, what's been nice to see is how terrible a lot of these assets have finally started to perform. All of these assets that we've, you know, for a long time sort of known, okay, they're kind of useless. They don't do anything. One thing that's completely collapsed in on itself is the crypto VC game. I think crypto VC was this super predatory, you know, one you can always make an argument here that like a tremendous amount of crypto is predatory. I was personally never on the VC side. I was always on the trading side. But there was something I really didn't love about the VC side, which is that it was predicated on it was just predicated on getting into things really early by pricing them super low and then selling a very tiny amount of supply at extremely high inflated prices to the public by selling them a vision and a dream of something that honestly, like most of the VCs that invested in didn't even believe. They just kind of knew that they were playing the game. I think there's some VCs, you know what, one person I'll call out by name as somebody that I respect on an intellectual level, and I think he actually genuinely believes in things and does a lot of homework, is Chris Berniski. I think that guy's really, really smart and a talented guy. But I think the general crypto VC game has been one of trying to get in at very low prices and then sell very tightly controlled stuff at high prices, and that game is totally over. Like that, it's done. I don't think that's a serious game at all anymore. It's just about liquid trading, trying to capture inefficiencies in this market and buying good assets that are going to make money over the long run, which I think has been very, very, very good for the market. Like things, I think now finally in the next 10 years, you're instead of the last 5 years, Cardano has managed to stay in the top 10. No, it's I don't think it's going to be in the top 25 in the next 5.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Katana isn't another new general purpose blockchain. It's purpose-built for DeFi users to provide the best experience possible. It does this by sustainably generating deeper liquidity and higher yield than any other network. If your assets are sitting idle, then they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners like Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of KAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for the lucky ones. As always, investments in blockchain technology involve risk, terms, and conditions apply.
So let's talk about like, let's say that all of the junk finally gets cleared out, the moment we've kind of all been waiting for, right? It feels like the top 10 is going to be like a couple of stable coins, Bitcoin.
Yeah, I mean, a decent amount of that money is going to flow into Bitcoin, I think, and I think that's definitely a tailwind for Bitcoin. But I also think a lot of that money is going to be taken to cash or placed in the S&P if they're smart.
That's where I disagree. I don't think that money's going into cash. I think if you're degenerate enough to have been invested in something like coin number 50 or 100, or even Cardano, you're not just going to give up on crypto altogether and hold dollars as they, spiral down the drain. I think Bitcoin's going to be the baseline, but who knows, right?
Or maybe it gets cycled in the hyperliquid.
Yeah.
Syrup.
I mean, there's one thing.
I'm like, I want to find a reason to just own a ton of BNB.
Binance, it's Binance good is the reason. I don't know.
Right?
Like Binance keep growing.
It's like one of those things. Like I want to learn more about Binance's plans to take over the world. Like if they introduce stock trading, I mean, they could really blow up as a company.
They're not founder led anymore, though. That's the problem.
That's
Janowitz
true.
was tweeting about this. Like once you lose the founder, you lose the vision, and you end up with value extractors. I mean, maybe like Satya Nadella is a sort of one-off example of a non-founder that
Steve
you'd want
Ballmer led Microsoft. Well, it's just Microsoft guys now.
Yeah, I mean, the thing is, like, I don't expect Binance to be a force to be reckoned with without CZ. Like the game is just too competitive, right? Let's talk about Hyperliquid and Robinhood for a second. Like two founder-led exchanges that are really competing right now. I think they're going to eat Binance's lunch, but like the question is, do they eat each other's lunch? And there's this big debate going on, kind of in as crypto as a meta kind of dies. There's this big question: does decentralization still matter, right? And insofar as Robinhood has a bunch of TradFi users and can onboard them with crypto bells and whistles fairly easily, and Hyperliquid's kind of coming from the opposite end of the spectrum. Do they meet in the middle? Does one beat the other? I have kind of like a non-consensus take on this that's sort of bullish Hyperliquid. I think Hyperliquid is going to do just fine, if not beat Robinhood. And the reason why is, even though it's not the most decentralized blockchain in the world, right? I think it's been criticized for having not enough validators, blah, blah, blah. It's still a lot more decentralized than Robinhood. And so you could probably build applications on top of Hyperliquid with a lot more confidence than you could build applications on top of Robinhood. Also, fees are a lot lower on Hyperliquid. Robinhood charges like 10 bips per crypto trade, just still substantial. I think it might be almost 10x what Hyperliquid charges. So to the extent that decentralization is still kind of more trustworthy and carries lower rug risk, it may be that we see financial applications getting built on top of Hyperliquid that are more interesting than those getting built anywhere else. And that's why I think Hyperliquid may end up winning. I don't know, though. I haven't really formulated this view, and I'm not sure that it's an investable thesis or not. But like we should at least talk about Hyperliquid versus Hood, because these are the two founder-led exchanges that are really like ripping right now.
Yeah, I think that it really just has to do with fees at the end. It's fees and marketing at the end of the day. And the reason that I say that is because that argument about decentralization was like that was an argument that people would use for Ethereum, and I don't think either of us would necessarily agree that decentralization adds a tremendous amount of value to Ethereum versus a Solana, for example. And So I'm skeptical of the argument that decentralization is going to help a business like Hyperliquid succeed. What would your argument be? Like why would the centralized nature of Robinhood hurt Robinhood and the decentralized nature of Hyperliquid help Hyperliquid?
So the reason why I think so, you're right that decentralization. How do I phrase this? You're right that decentralization didn't save Ethereum, right? That people don't care that much, right? Maybe Solana's a little more centralized than Ethereum, and Solana took off on Ethereum's watch. I don't think there's like I don't think it's a clean spectrum like that. I think for a developer, right, there's a big difference between building on a decentralized platform versus building on Jonah Chain, which is just like me hosting a Google spreadsheet, you know, like something that's that centralized, like a ledger that's that centralized, just me with my private Google password hosting one shared Google spreadsheet, and you put your entries in it. Like that's a lot scarier for a developer to build on than something that's like actually decentralized. So I think maybe I would rephrase it from like decentralization matters to like some decentralization matters, but you don't need to be like ridiculously decentralized to matter. You can just be kind of decentralized. And so going back to the hype versus hood thing, um, I'm arguing that a developer ecosystem, a financial application ecosystem, may indeed flourish on top of hype, whereas that's kind of less likely to happen on hood. Because if you develop on hood, well, first of all, I have developed on hood before as a market maker in their ecosystem, and connecting to their APIs involved back and forth with like a super incompetent tech team and just a generally slow uh, iterative process. Meanwhile, like building on hype, never done it, but from the people I talk to, it's fairly straightforward. All the docs are out there. It's open source. You can just create DeFi money Legos and stack them on there. And if your product has demand, then great. If not, whatever. But you're not worried that the rules of the game are going to change on you. So, basically where I'm going with this rant is, if you're a software developer or you're a financial ecosystem developer, you're trying to like link, let's say you're doing something that some guys I talked to recently are doing, which is just building a basic off ramp, right? You shoot stable coins in there and spend with a Visa card on Apple Pay or just at the grocery store, and it just draws from your stable coins. You can put Tether on Tron, USDC on Solana, whatever you want, to this like wallet, and then you can just spend out of it, right? I feel like an application like that, just an off ramp application, one of 1,000 different financial applications I can think of, I'd much rather build that on Hyperliquid if I wanted to connect it to liquid markets, um, volatile markets like S&P or whatever, than on Robinhood, because I wouldn't have to interact with developers and get people to agree to expose APIs and negotiate privacy and blah, blah, blah. It would all just be kind of there, right? So, yeah, some decentralization matters, but the purists who believe that you need Ethereum level decentralization to incentivize developers to build dApps, I think that that's been effectively disproven as a fallacy. You're on mute.
Yeah, I think that makes sense, and I buy the argument. I just think that for them to compete head to head, it really just comes down to the fact that Robinhood is very easy to use. Hyperliquid is also easy to use, but I actually think Robinhood is much more easy to use.
Hype's way harder to use for a consumer than Hyperliquid.
Way harder to use it. So it's really for the like hardcore crypto natives, and Robinhood is encroaching in their territory in a way that Hyperliquid is not really encroaching on Robinhood's territory. So one thing I get nervous for a lot of these crypto exchanges is, if you can do everything in one place. I mean, one of the things that I hate about crypto is that how fragmented my life gets, how many different wallets I own, how many different places my money gets to. And that's, by the way, that has been the edge. That is the edge for a very long time, is you have to track all these different chains, and you have to, figure out how to move money from here to there, and then you have to figure out how to buy this asset that was supposed to 10x because it was the new Uniswap on Avalanche 7 years ago. Anyway, so basically what I'm trying to say is that consumers want to be able to do everything easily in one place, and Robinhood is by far the furthest along in terms of that, which is why I'm super bullish on Robinhood. Also, they have great promos. So I had a stock portfolio over with Fidelity, a bunch of my equities there. Then I come across one day that Robinhood's offering you a full 1% on your entire portfolio if you just move it over to Robinhood.
That's a huge deal.
Yeah, it was insane. So obviously I'm like, okay, I'll just move it to Robinhood. There's no downside to moving it to Robinhood. And then I moved it there, and life has been pretty good ever since because it's easier to use in the Fidelity app. Although it is more fun to use, which makes me take more trades out. It's crazy how dopamine can just hijack you like that. You like to think that you're this rigorous emotional guy, and you're like, wait a second, why are my trades up on Robinhood versus Fidelity? Oh, because Fidelity sucks to use and Robinhood doesn't.
Yeah.
Right. So then it makes you think, how many of these trades am I taking out because they're good trades, and how many trades am I taking out because I want to feel something? But that's a whole nother discussion.
You just want to feel feelings. Yeah. I mean, one of the things that I've done to try and prevent myself from trading too much is for equities, I use JP Morgan, and they have this horrible trading experience. So especially for fixed income, like if you want to roll a T-bill, for example, it would take Albert Einstein an afternoon to figure out how to do it, and me much longer, so basically I just call them up.
Can you just call? Yeah. Can you call them?
Yeah. So I call them up. They hate me because they're like, why aren't you just doing this yourself? I call them up and I just put in an order, like Gordon Gekko style, whip out the cordless phone with the antenna and just dial the banker and be like, hey, you're my execution trader. Roll the treasury bill to the next month. What's the yield? Okay, and you kind of get that feeling of power and relevance for a second. But more importantly than that, it also talking to another person about your trades, even if they're not judging you or schooled in risk and reward and upside and downside and stuff, it still makes you think twice.
You're telling me they don't judge you?
They do.
When you call them up and you give them your latest wacky plan, like, hi, can you put more of my life savings in IBIT? Do you have any levered options yet? They don't.
I'm sure they're judging me, but they're trained to speak to me like I want to be spoken to, So I don't feel the judgment, but I still know it's there. And that alone keeps me from doing too much stupid stuff. Imagine if you had to call an execution trader to buy meme coins last summer or the summer before. Imagine if you were like,
well, I did.
Hi,
that
Lydia.
was the craziest part is because I had my analysts as my execution traders, and I didn't do any of the execution. So I would just call them and be like, I need to buy some bonk right now.
Yeah. Get me Zin.
Really?
Give me $1 million worth of Zin.
Dude, Zin was crazy.
That was a token.
$1,000 into that thing, went to 150. That was insane.
Wow.
And then I sold it at 90. But anyway, you never count the highs.
No, you never do.
You get out.
I put $2,000 into this token called Solana and Poors. In the last week, it's this horrible, stupid meme coin that takes all the trading fees, which are egregious, and dividends them to you every 5 minutes in the form of tokenized S&P 500 ETFs. So yeah, so it was a meme coin.
How's it done?
So I bought into it at 100. I'm going to tell you the story. So I bought into it at $100,000 market cap, 6 hours after it launched, and I thought I don't have a lot of downside from here. It's already got
How'd you find
some
it so
people
quickly?
talking about it. One of the chats we're in, some guy was just like, "Hey, I bought this shit coin what do you think? I looked at it and I'm like, okay, I'll YOLO $2,000 in there. Then
That's funny.
then it immediately 30x's, right? So I'm like, wow, great. And every 5 minutes, it's dropping more tokenized S&P 500 into my wallet. I'm like, oh, this kind of meets the current X stocks meta. This is great. This thing went back to zero. Like the chart is ridiculous. Let me pull it up. Hold on. It's like it literally went back to zero over in less than 72 hours.
Did you sell any?
Yeah, I did. So
Okay.
I sold. I put in $2,000. I sold when it was $2,000. So I didn't lose. I didn't make or lose anything on that. And I got $1,000 worth of tokenized S&P airdropped into my wallet, just other people's trading fees. So I guess you could say I made 50% on this trade. I made $1,000 in 3 days. But just thinking about this, like the reason why I brought this example up was not to brag about making $1,000. It's kind of like not why we're here listening to this podcast, but just like last summer, this up down would have lasted more than 3 days. It would have lasted like 3 months, right? And crypto participants are just so fed up with meme coins that even when there's something really interesting that perfectly captures the current meta, this is definitely the most talked about meme coin for a day right now. This cycle just like comes and goes before you can blink. And to me, that tells you that there's just like there's literally just there should be a skull and crossbones logo on any token that isn't actively buying back tokens with business revenue. Any of this other stuff is just we're so firmly into like recognizing revenue as the meta of the time. There is no other meta. Everything is a Ponzi if it doesn't generate revenue.
I think that's the unfortunate reality that we've all come to. So on the next pod, what we should do is we should gather up some interesting companies that we're looking at, and we can run through them with people.
Yep.
But it's just, this meme coin meta. What's a little bit sad is a lot of people made it their personality and their game, and now that the game is slowly dying. I mean, you can still make money as evidenced by what you did. I mean, if you just you get in luckily at 100K, you flip it a mill, you can make like 25, 50K here and there if you size it correctly, I guess.
Yep.
It's
I
just
could have made
never
money.
been-
I just hung on too long. It didn't occur to me that this was going to last less than a week, you know?
One of my favorite metas was when new chains were launching. This is like way back in 2021, but just speaking of metas, when new chains were launching their EVM compatible versions. It's like BNB launched an EVM compatible version, Avalanche launched one, and then they started like creating the clones of Aave on these platforms, and you would go over and you'd buy them at like a super low market cap and everything on the Avalanche, because they announced incentives for the pools would pump like 10x over a period of 2 weeks, and these things would last 2 to 3 weeks. Basically, alt seasons would last 2 to 3 weeks, and now alt seasons don't last at all. So, and that is, I think, we're more honest about what we're doing here, which is just playing a little game. But isn't that trading in a nutshell? One of my new favorite metas is this is the treasury company stuff. So, for example, Ion. Did you see Ion?
No, I'm not following
Hyperion.
these treasury companies. They're too scammy for me.
So
And you can't short them.
Hyperion. Yeah, Hyperion DeFi went up 50% today. It's crushing it. It's supposed to. They're going to be buying Hyperliquid. They're buying Hyperliquid, and they just keep going up, which is funny because Hyperliquid itself is not going up, but the thing that's buying Hyperliquid is getting a lot of happiness.
Ominous.
Yeah.
Ugh. Okay. So
And then, like, by the way, Circle, I crushed that trade. If I could have sold the calls, which I was not able to sell the calls because I needed them to be covered. But we did we not talk about it on the exact peak? Did I not call the exact Pico top on this thing? Do you remember when I
Yeah,
said
yeah. You did.
it has now hit the full market cap value of USDC? This is a good psychological point for this thing to turn around. That was
Yeah,
the day it topped.
yeah. Circle's trading $200 now, which is
Yeah. When we talked about it, it like
30%
hit.
off. It hit 300.
Yeah, it was trading 300 when I was saying short it.
I mean, I think, yeah, and the Coinbase Circle pair trade that we talked about has done pretty well. Just have to quickly check where Coinbase is trading. Yeah, Coinbase is on the highs. Circle's 30% off the highs. So there are things out there. Just you have to act fast and you have to be decisive. I don't know. Maybe as we close out the podcast here, it would be good to talk about, it's much easier to just ride a trade for 5 years like Bitcoin than it is to tactically time in and out points like I tried and failed to do on one of these random shit coins, or you maybe tried to do on Circle options. Like, it requires so much focus and decisiveness and commitment to just be like, I am now going to restructure my portfolio in such a way that I'm going to deploy tons of assets into a slightly exotic structure like Coin Circle, or selling Circle calls, or like hood versus hype. Like, it requires so much conviction and structuring. I don't know. Like, what's the best trade you've ever done in your life that wasn't like a straight up buy BTC and ride it for a decade kind of trade? Like, what's the best like pairs trade you've ever done? Can you think of one?
I can think of a ton. I mean, we could do a whole podcast on the trades
Yeah.
that I've taken out, and like the ways. I mean, I think I've talked about this on the podcast before, but one of my favorite trades I've ever done was realizing that a tremendous amount of people were short Bitcoin in July of 2021, and I would come in on Fridays and just buy like insane amounts of calls. And it was a very thin book, and so like shorts just started getting obliterated, and Bitcoin went from 30,000 to 40,000. I think we made $200 million on that trade. Like that was,
Wow.
I think that was a phenomenal trade. I mean, and then there are all sorts of like stupid trades. Like these trades worked back in, like another more recently good trade that I put on was on Liberation Day. Basically buying a bunch of gold and selling all of my equities for gold, and then rotating it back to equities at the bottom.
Yeah, that's a good trade.
That was predicated on not believing that these tariffs would last, but believing that there would be a short-term movement that I could take advantage of. I think a lot of my earlier trades were based on market structure, and a lot of my current trades are based on more on headlines and trying to understand what's going to go on, plus market structure. I mean, like even like just recently, the Liberation Day, like I got long because of market structure, because I got long I got long on a day when everything was basically like 2 days after everything went down together.
Yeah.
Because okay, liquidations are over, we're stabilizing a bit, getting the last sellers out. Now let's get back in.
Interesting.
Kind of move. And
yeah,
what
I
else?
think
There's a really funny trade that I took back in 2021. This thing called Phantom that has a ghost as a.
I remember that chain.
You see this like it's still around. It's called what's it called now? It's called something else now.
It changed its name.
Like I literally just had a massive brain fart because I owned this thing about 3 seconds ago. Anyway, the thing that used to be called Phantom. It had a ghost as its mascot, and so every Halloween it would go up, and so I would put on a pairs trade against. It was called the spooky season, so I'd buy some Phantom like a week before Halloween and short some Avalanche, and that trade would work. And then more recently, and by more recently I mean over the last 2 years, a lot of it has been trying to find token unlocks and just shorting the stuff that sucks and buying the stuff that doesn't suck.
One of my favorite trades I ever did was in 2014. Oil was just steadily grinding lower because shale was hitting the market basically at scale for the first time. And the market was kind of digesting it gradually. So it was a really steady trend down. And oil market participants were panicking about this shale. So they were buying lots of puts, but the market was going down slowly, not quickly. It was just grinding lower every day. And so what I would do is I had an amount of oil that I wanted to be short. I had a sort of like a target delta position that was basically the most I could stomach within my risk limits at Goldman. And then what I would do is I would sell puts because people were just bidding them to the moon. And I would basically oversell spot on top of selling the puts to preserve that delta, so that by selling the puts, I wouldn't get myself less short. I would maintain the short that I wanted and be short puts. And it worked great. I would collect theta. I would collect expensive, vol. I basically sell expensive vol, and I would, profit as the market was going down. It was like this kind of double whammy. I'm wondering if it weren't for the fact that Bitcoin vol is so low right now, there's kind of the same trade to do in the opposite direction. Like, it feels like it's pretty unlikely that Bitcoin is going to rip higher, but it probably will grind higher over the next year or two. So maybe it's possible to do the same thing where you just like buy spot and sell calls, and overbuy spot and sell calls so that you have your target delta position, and you collect theta as the market goes up slowly.
Yeah, I mean, I get nervous around this just because when Bitcoin moves, I mean, it really fucking moves.
Yeah, it goes.
But as you said, I'm actually slightly bearish, and I mean, this is a good time from my perspective.
Yeah, like if ever there was a time to sell Bitcoin calls against your spot length,
now would be a good time.
Structurally, it's a good time. Vol wise, it's probably 5 out of 10, but flat price wise, it's looking attractive. So maybe that's something to do. I guess we got to get a little more into the weeds to extract extra alpha out of this market, because we're not just going to be able to buy Zin and have it 70x on us.
Okay, that's fair. Trying to think. I'm looking because I was trying to find the vol. What's the vol right now? What are we looking at, Jonah?
Double check. Somewhere around 30%, if I had to guess. Let's see. BTC implied volatility. I haven't traded Bitcoin options in a while.
I mean, you remember when Bitcoin options would consistently be in the 80s?
Yeah, 35% ish for 37% for 30-day after money vol.
It's just too low. I mean, maybe
this is the thing though. It's not. It's not too low.
Like the market has changed. I feel like I lost a child.
It's low relative to how it used to look, but it's still probably high relative to like realized daily volatility, right?
Yeah.
Market's just not moving. So this is another thing. Like, you learn this in commodities markets. Sometimes it pays to sell vol on the lows of a long downtrend in vol, just because spot vol is even lower. And the fact that people have recency bias and think of vol as like, oh, it should be higher, doesn't mean, it realized volatility in front end options. It's just math. It's not about like reversion to some historical mean. What's flat price realizing versus what the implied volatility is. So I think now might be like a sneaky time to sell some optionality in Bitcoin.
Well, you know what? I know what I'm doing after this pod. I'm going to go take a look at that. And then on the next pod, I can come back and tell you guys what I did, which will depend heavily on what the market does, because I have to keep... no, I'm just kidding.
Nice.
Yeah.
How you beating the heat, Avi? Friggin' hot.
I'm in the Hamptons, man. It's not so hot out here, actually. It's like 85, or it's like 75, 80.
75 feels cold compared to what it's been like recently here in France. This place is just roasted.
Yeah, you guys are freaking humid. You didn't want to take a trip out to Saint-Tropez?
There's nothing interesting in Saint-Tropez for a married guy, Avi. It's
No?
no. It's Saint-Tropez for unmarried dudes.
Okay, fair enough. I thought it was
Yeah.
for like a good, nice little family vacation type vibe.
We live in the nice little family area. The Saint-Tropez and Monaco are where you go to, pop bottles and see the sights.
Yeah, fair enough. Well, I'll leave you to it then. Enjoy the sights, Jonah. This is a pleasure.
Enjoy the
as
Hamptons,
always.
Avi. This is a great chat. I'm gonna go start looking at those IBIT calls.
We'll talk soon.
Till later. Later. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.